So today I want to talk about my real estate strategy. I buy all kinds of property, commercial property, single family homes, multi-family homes, and pretty much everything else. So I have a different strategy based on if it's a hot market or a slow market. Right now we're in a very hot market. My strategy in a hot market is to do a lot of fix and flips and just do regular flips without fixing stuff up, and then of course wholesaling. The reason why I like doing these particular things in hot markets is the prices are just very high, and I don't want to get stuck with holding them in case the market happens to drop. So when I'm fixing and flipping, I'm in and out really fast, and I can make a quick $20,000, $30,000, $40,000 plus on any of these strategies in a short period of time. And if the market happens to do a correction and go down, I'm not stuck with a whole bunch of properties at the high part of the market. Now, when the market does start to drop, which every 10 years goes up and down, when the market does drop, on a slow market, I like to buy and hold. And I do very little flips and very little wholesaling when it's a slow market. First off, it's hard to do a lot of this because there's not a lot of buyers that want to buy at a very good price. But on top of that, it's a great time to build for your future. So when I buy and hold, my first thing that I usually do is try to rent properties out. However, there's a lot of good reasons why you would want to do a lease purchase, so give someone the option to buy the home after they rent it. The BRRRR strategy, so if you don't know what the BRRRR strategy is, it's when you buy, rehab, rent, refinance, and then repeat and do it again. So with the BRRRR strategy, you could just keep buying homes. You use a little bit of money on the front end, or you can borrow money on the front end, and then you rehab the home, then you rent it. When you rent it, now you'll get people and banks that will refinance it at a good rate. And once you refinance it, you can get all the money back that you put into it when you bought it in your rehab, and then you just go ahead and repeat it and keep doing it again. And that way you can accumulate a lot of properties in a short period of time. The next thing I like to do is turn single-family homes into duplexes. Mostly I do this with homes that have basements or split levels. And I'll make sure that I add a kitchen, bathroom, central heating and air on both levels. So that way, two different families can live in that house. So instead of a house that would normally rent for $1,500, I might can get $1,200 for the upstairs and $1,000 for the downstairs. Now I'm getting $2,200 instead of $1,500. So on a lot of homes, it's a much better investment and a much better return on your money if you could turn them into duplexes. Of course, you got to check the zoning and all these different things, but in most areas, they allow a certain amount of duplexes in a neighborhood, and most neighborhoods don't have that capped out yet, so it's something that you can usually do. The next thing I like to do is turn homes that into group homes. Basically what that is instead of renting it to a family or turning it to duplex and renting it to two families, I rent the rooms. So I might could turn like every bedroom and then dining room, living room, all into different rooms, and I can get sometimes 8 to 10 rooms in a house, and I can get $400 a month per room. So if I can get 10 rooms in a house, I'm now getting $4,000 for that house every month instead of the normal $1,200 or $1,500 that I would get if I just rented it to a single family person. So that's a very good strategy that I use on homes that are like not in neighborhoods, have a lot of space, a lot of parking, and I have a criteria that I look for, and I have about half a dozen of those right now. Of course, if the house is in a really good area for Airbnb, and I think a lot of people will want it, and I can't get really good rent, just renting it to one person, I'll turn that home into an Airbnb. So I keep a few Airbnbs going, and a lot of times I can get like $100 a night on average instead of $1,200 for or $1,500 for the month. So I can get almost double the amount of money on the Airbnb, because if I can get $100 on average a month, $100 average per day, that's $3,000 per month, as opposed to $1,200 or $1,500 a month if I just rented it. Now, if I buy homes in specific ways, I even like to do wraparound mortgages and and give other people a mortgage. So a wraparound mortgage is when I keep my existing mortgage, and then I give a new person a new mortgage, and then basically they pay me a few percent more than I'm paying on my original mortgage, so my monthly payments are going to be a little higher, so I'll make a few $100s a month on the payments, and then I'll usually also charge them an extra, $20,000, $30,000 more for the house than I normally could if I just sold it regularly, because they don't have to go through financing and stuff. So there's a lot of people that have a significant amount of money they could put down or use to buy a house, but they just can't get a loan, either because their credit isn't great or maybe because they don't have a regular job, and the banks really want someone that has a regular job and sees that income coming in. So again, that's what I would do if I have a mortgage on it. If I don't have a mortgage on the house, sometimes I'll just owner finance a house for somebody. Again, the reason why I would do this is you can get a lot more money for a house when you owner finance it as opposed to just selling it for cash. Now, on a wrap or owner finance, I do get a significant deposit from the people up front. I'll usually get at least 20% of the house value. So I get a lot of money, and then I'm also giving them a higher price that works for both of us because they couldn't buy the house any other way. So most houses that I wrap or owner finances are houses that I buy subject to. When I say subject to, I usually buy these houses subject to an existing mortgage or lien or whatever that the people have. So a lot of times I go and buy houses, and I try to buy them at a price where I can, fix them up, flip them, and make a certain amount of money. However, sometimes when I go and try to buy homes from people, they owe too much on it, or they just want too much for it, and most people can't buy those homes because if someone wants too much for it or they owe too much on it, there's just not enough room for anyone to buy and make money on. So what I do is I go in and I say, you know what, I'll pay you your price for the house as long as you keep the mortgage. I'll take over your mortgage for you, and if you have any liens on it, I'll take over those and I'll end up paying those. And then they just sign the house over to me, and they can get a higher price that way. And on those houses are the ones that I usually do wraps and owner financing on. Again, that's my strategy I use. It's been working very well. Right now I have over 100 properties that I currently rent out or lease purchase out, and I'm always looking to get more. However, right now is a very hot market, so I'm mainly fixing and flipping, or just wholesaling to people and not keeping them long term. And if I see the market turns and prices start going down, I'm going to start switching to this slow market strategy. So I hope that helps. I hope that gives you some good advice, and you can do some of this stuff. If you have any questions, definitely reach out and let me know, and I will do another video very soon. Thanks for watching. Bye.